Hello guys, welcome to my channel. Evolving Insurance Landscape in IFSC, the Gujarat International Financial Tech City, GIFT City in Kantinaga, Gujarat, is India's first operational greenfield smart city, housing a domestic tariff zone and an international financial service center (IFSC) in a multi-service special economic zone. As part of developing India's very own and first IFSC, both India and foreign entities are permitted to establish and operate IFSC Insurance Office IIO from GIFT City. Upon obtaining the required approvals, the IIOs have advantage or the ability to transact in freely convertible foreign currencies in offshore markets, while being situated within the territorial borders of India from 2015 to early 2020. The Insurance Regulatory and Development Authority of India (IRDAI) issues guidelines for IIOs IRDAI IIO guidelines. Thereafter, pursuant to International Financial Service Center Authority Act 2019, the International Financial Service Centers Authority (IFSCA) was empowered on October 1, 2020 as the unified regulator with wide powers to develop and regulate financial product, financial service, and financial institution in IFSC, including IIO. Major development in insurance regulation in IFSC. In October 2021, the IFSCA notified IFSC registration of insurance business. Regulation 2021 IILO regulation superseding the IRDAI IIO guidelines. The IIO regulation provide for eligibility criteria, process of application for registration, permissible activities by an IIO, and other incidental matters. The home country should be a country which has signed a double taxation avoidance agreement with India. The regulation inter alia provide for the following: A. An IIO can conduct its business in a freely convertible foreign currency other than the Indian rupee. A registered IIO not engaged in insurance is permitted to engage in business from the IFSC, says as in any country outside India. C. An IIO engaged in insurance business may accept residence business from content based in the IFSC or from India Insurance in accordance with order of preference prescribed by the IRDAI. D. An applicant willing to set up a branch office in IFSC is required to earmark USD 1.5 billion as assigned capital and maintain solvency margin in its home country as prescribed by the home country regulator. Point A. An IIO which is set up in an incorporate firm is required to have a paid-up capital as prescribed under the Insurance Act 1938 and shall maintain a solvency margin as prescribed by the IFSCA. On October 27, 2029, the IFSCA issued the guidelines on operation of IIO's guidelines. The guidelines inter alia provide for operational aspects of an IIO, including corporate governance, norms, settlement of claims, research, maintenance of books of accounts, and appointment of a principal officer. On July 4, 2022, the central government has notified the non-application of various provisions of the Act to seize an IFSC notification. The notification brings about a paradigm shift in the manner insurance companies are regulated in the IFSC. The notification inter alia exempt IIOs from the mandate of Section 101A of the Act, which provides for insurance to compulsory place certain risks with India insurer. The notification further amend the investment regime applicable to IIOs allowing greater flexibility in investment by IIOS. The extent working of Section 27 to 27A of the Act governing investment by insurers in India has been in effect. No field for IIOs. The IIOs are required to comply with only two conditions. An IIO is not allowed to invest more than 5% of its assets in a body corporate which is owned or controlled by the promoters of the IIO, and all investment by an IIO must be held free of any encumbrance. Apart from this, the IFSCA has been given broad power to regulate investment by an IIO, but it yet to come out with regulation for investment norms of IIOs. In absence of any specific investment related regulation by the IFSCA, the IRTAI Investment Regulation 2016 will apply to IIOs along with provision of Act. Insurance opportunity in kept with the flexibility accorded to IIOS in the manner set out above. IFSC can become an attractive destination for the following insurance product. A. Global life insurance policies for resident India. Frequent travelers premium being subject to limits prescribed under the Liberalized Remittance Scheme. D. Insurance investment plans for non-resident Indians, NRI, or non-Indians owing to the product being dollar-derived. The policyholder would be protected from currency depreciation risk. Further, this can also be used as a hedging instrument by NRIs wishing to return to India in the future. General insurance for industry. Various India companies engaged in specialized engineering products obtain general insurance policies from insurers outside India. Such products can be distributed through IFSC at competitive price due to applicable tax-intensive trade credit insurance with aircraft leasing and shipping business picking up in IFSC. Venues of trade credit insurance and aviation insurance can be explored. Cross-border residence under the order of preference for obtaining residence by India General Insurance companies are provided by the IRTAI IIOS. There are given a preference over cross-border insurers, giving IIOS competitive edge over cross-border insurance. F. A committee was appointed to develop IFSC as a global hub for insurance on October 14 and 20 and 21. The committee submitted its report to the IFSCA. The committee recommended introduction of captive insurers, promoting aviation insurance, premium financing, and developing alternative risk transfer solutions, including catastrophe bonds. Conclusion. Currently, there are 4 insurers who have set up operation in IFSC, including insurance from the public and private sector. With the extent easy of business and the insurance sector in IFSC has many growth opportunities of even it is evolving stage. Such it is an underexplored avenue. The barrier of entry and operation is relatively low. The class of expected policyholders is significantly different for IIOS and India insurers. While the former would cater to very corporate and high net worth individuals, the latter have a larger policyholder base in India with increasing focus on insurance penetration. Accordingly, the IIOS have been given greater flexibility in market access, investment norms, and product structures when compared to India insurers. With the fast changes in the regulatory environment in the IFSC, it has become a global insurance hub connecting the insurers and reinsurers to Asia market, providing the necessary infrastructure, policy support, and tax incentives. Disclaimer: this not only provide information on IFSC in India, the insurance activities being permitted tender. The note is for informational purposes only. The information and or observation contained in this note do not constitute legal advice and should not be acted upon in any specific situation without appropriate legal advice. Thank you for watching. Don't forget to share to your family, to your friend, and your someone love. Bye.